Meta platform said it was bringing in outside partners to help fund the massive infrastructure needed to power artificial intelligence as it disclosed its plans. That was in a filing on Thursday to offload $2 billion in data center assets as part of that strategy. This reflects a broader shift among tech giants long known for self-funding their growth as they begin to face soaring costs for building and powering data centers for which there is a huge demand. And last week, Microsoft forecasted a record $30 billion in capital spending for the current quarter. That's on artificial intelligence. Wall Street analysts observed that Microsoft's Copilot AI chatbot is now driving significant growth in its Microsoft 365 enterprise software business. AI has led to shares value appreciation, with artificial intelligence bellwether Nvidia tripling its value in just about a year and now worth well over $4 trillion. Hello, welcome to Global Business Insights, where we consider the headlines moving markets in more depth. In this episode, it's all about artificial intelligence technology and all we are learning about this transforming tool that is rapidly embedding itself in our daily lives. The relationship between artificial intelligence and ideology is not just complex, but also multifaceted. While recent United States artificial intelligence enabling executive orders are pushing ideological neutrality, others simply call for bias-free values alignment and fairness in new applications, adding that AI should not reinforce existing power structures and ideologies. But all AI systems are trained amid peculiar cultural context, whether American or Chinese, and can very easily lead to discriminatory practices excluding certain groups from other cultures. The way forward is not just to build more transparency, adaptability, fairness, and accountability, but also ensuring artificial intelligence acts more like an assistant and never a decider, nor like an indispensable crutch. Consumers also must not consume artificial intelligence passively without discernment and training on how to interpret its output. Artificial intelligence chatbots take up the bulk of research and analysis, diagnosing ailments, and they do accelerate decision making. It increasingly facilitates reasoning and deductions used to be done by humans, which is most helpful, but can lead to unintended outcomes. An example is the Google effect, that is becoming overly dependent on search engines rather than human reasoning, leading also to potential atrophy of normal human reasoning and problem-solving abilities, and also harming development of critical thinking capabilities that are needed in, say, an education or research environment. Others argue that it could lead to greater distrust of human expertise, especially by young users who prefer machine interaction, which exposes them presumably to less judgment. Also, one can underestimate the risk of ideological bias, machine hallucination, abuse, misinformation, and AI cyber attacks. The concept of artificial general intelligence, that is AGI, which is an AI mode smarter than top human experts across a wide range of subjects, is yet to be fully attained, and the first country to master AGI will be able to exert a disproportionate global influence. Also, already we are seeing the AI trade, where investing and selling, which sees a monetization of AI capabilities justifying elevated evaluations of related stocks. It's also not lost on investors that Google, Microsoft, and Meta are on track to spend $400 billion in 2026 on data centers and AI infrastructure. What has changed is that investors appear less concerned about not seeing commensurate returns, and they are encouraged by big tech pointing to the huge demand for artificial intelligence applications and related products, and of course the backlog of orders. The AI supply chain is also somewhat unusual. At the upstream, you have highly advanced chip design and manufacturing and software development fed with data, enabling it to learn patterns and relations within the data. NVIDIA is the leader in this space, and they work with closed models, and of course they're also understandably concerned with protecting their vast investments from industrial espionage, as they collaborate with other players and consultants on language models, including OpenAI, Anthropic, Google DeepMind, and others. NVIDIA is also helped by semiconductor export controls designed to give the US an edge. But China's DeepSeek R1 application now also have technologies only a few months behind NVIDIA's. And we have another Chinese company, Moonshot AI. They have also released a state-of-the-art and robust open model, which is less expensive and easier to adapt to different contexts. And at the front user end or consumer end, we do have the Magnificent Seven embedding AI into their software and various devices, transforming the customer experience. We also have robotics with a wide range of advanced applications. Between the front customer end and the chip software development, we have an array of global distribution or diffusion activities and economic adaptation and monetization processes. China is less exposed to political consequences associated with, for example, reducing labor and the many safety and privacy regulatory hurdles. And China is perhaps able to faster turn ideas and capabilities to customer applications. China may also have an edge in selling AI models to developing economies and to some emerging economies with leaner wallets, also prepared to subsidize the physical and digital infrastructure investments. Other wealthier Arab nations, Saudi Arabia, Qatar, and UAE, who can afford the best, have been sold on US-made chips and data centers and also locked into use of US technology. Whether China or US distribution of AI comes with the baggage of the culture in which the models have been trained. The diffusion of AI technology in an increasingly multipolar world has a major impact on the geopolitical landscape as minds and cultures face a new powerful religious force fed with assumptions and mindsets that easily influence the Gen Z generation, who trust machines more than any human voice or influence. Also, national security institutions have to plan for future challenges associated with artificial general intelligence, especially artificial intelligence related cyber attacks, which are much more complex to diagnose and respond to. AI-enabled military campaigns could also be a new thing altogether. Also, we can get corruption of data deliberately to advance misinformation, and scenarios that prepare the world for the worst should be part of a response strategy in a radically transformed world. Let me close by mentioning that surveys show young people in developing economies and emerging markets tend to trust AI more than, say, in Europe or America, which sounds odd, but that's what the data shows. Older observers, especially in Western developed nations, also see AI as guilty of fostering alienation from larger societies, encouraging distance between people, and loss of respect of traditional authority figures like teachers, mentors, or parents. Also, there is a real risk of unhealthy overdependence. Already, we're also seeing that as AI-infused gadgets are pushed out, AI is acting more as mediators, helping polarized groups communicate better and also potentially reducing the preponderance of conspiracy theories. No doubt AI has many uses. Tasks like getting directions from maps, selecting items while shopping, fine-tuning, writing, all provide that very customized, convenient customer experience that consumers so much love to have. Also, one must add that to play in this AI space, power is key, and we will see higher demand for cleaner nuclear electric power generation. There are also many unresolved privacy concerns, and implementing neutrality will be easier said than done. Policy leaders have to see this AI tsunami as an inevitable tidal wave, requiring proactive strategic responses. Like I said, it's still not obvious. It's still not obvious that AI will make us wiser, but it will certainly make us more efficient and more productive. We also are less clear on the full implications of increased outsourcing of human reasoning and deduction capabilities to machines. And we still don't know what an AI-driven crisis could really look like.
Today, we are proud to report a June quarter revenue record of $94 billion, up 10% from a year ago, which was better than we expected. EPS set a June quarter record of $1.57, up 12% year over year. We saw an acceleration of growth around the world in the vast majority of markets we track, including Greater China and many emerging markets. And we had June quarter revenue records in more than 24 countries and regions, including the US, Canada, Latin America, Western Europe, the Middle East, India, and South Asia. These results were driven by double-digit growth across iPhone, Mac, and services. We set a June quarter record for iPhone, which grew a strong 13% year over year. We saw iPhone growth in every geographic segment and double-digit growth in emerging markets, including India, the Middle East, South Asia, and Brazil. Mac continued to see excellent results, with revenue up 15% year over year. And we set another all-time revenue record in services, which grew 13%, with double-digit growth in both developed and emerging markets. We see AI as one of the most profound technologies of our lifetime. We are embedding it across our devices and platforms and across the company. We are also significantly growing our investments.
Apple reported earnings topping Wall Street expectations in the June quarter for profit and revenue. iPhone sales jumped 13% year over year, and overall revenue grew 10%. It was also Apple's largest quarterly revenue growth since 2021. iPad sales and wearables, however, struggled, with iPad revenues down 8% and wearables also down 8.64% during the quarter. Notably, Apple saw its China sales in the quarter rising 4% on an annual basis to $15.37 billion. Markets expected a bringing forward on stocking up of iPhones ahead of tariffs, which may have helped the June quarter. So far, reports suggest higher US tariffs on Indian goods are unlikely to slow the role of India as the key hub for manufacturing iPhones, even if this implies more expensive smartphones for US consumers. Indeed, Apple has realigned its India exports to almost exclusively serve the US market. Apple shares closed down 0.71% but spiked up in after hours. Although Amazon reported a solid second quarter earnings, with earnings per share at $1.68 versus the estimate of $1.33, also up from $1.26 per share last year, and revenues reaching $168 billion above $162 billion expected, also up 13% on the year. Revenue at Amazon Web Services was up 18% in Q2 to $30.9 billion. Amazon shares closed up 1.7%, but its stocks sank in after-hours trading. This was due to disappointing Q3 operating income guidance. Well, that's it on this very special edition of Global Business Insights. This is Bode Shosami. Bye-bye.